Hello, hello. My name is Annie and today I'm going to be redistributing $6,100. I've gone to see my accountant and I've just filed my tax return. Now, I am self-employed and I do run a small business, so I am in charge of paying my own taxes and all of the like. On my channel, I talk a lot about tax minimization strategies. I know a lot of people this year actually do owe money to the ATO. I actually did owe money to the ATO. I owed $4,300 to the ATO. However, because I use all of the tax minimization strategies available to me, I have gone from owing the government to them owing me money, and I'm getting a tax refund. So today I'm going to show you how I did it. If you're a returning subscriber, then you see that I put money in my taxes every month with every cash stuffing. Well, that's the first category I always stuff. The second category that I stuff is my superannuation fund. Now, I always harp on and on about how taxation in this country favors superannuation or retirement savings. It is only taxed at 15%. So, I'm going to show you exactly how it works. And so I've got a quick maths lesson before I get to my cash stuffing. So, I'm going to assume that most people watching make between $45,000 to $120,000 a year. I'm only going to be talking about this tax bracket. If you make between this, then you pay $5,092 in taxes plus 32.5 cents per dollar over $45,000. Say you have $100, yeah? Let's break it down. 32.5 cents per dollar goes to the government. So the government gets $32.50 of your $100 and you take home 50, 65, 67, 67.50. That's how your $100 gets broken down with taxes. But wait, I hear you scream. I forgot Medicare levy. That's correct. We pay a 2% Medicare levy in this country. If you earn more than $90,000 and you don't have private health insurance, it's more than 2%. 2% of $100 is $2. So of your $67.50, you lose another $2. That goes to the government. So now of your $100, the government gets $34.50 in taxes and you take home $65.50. That's how taxation works in this bracket. Loosely, obviously, you might have deductions and also HEX bills, but this is the most simplistic form. Now, what do? I take the same $100 and I put it into my superannuation fund. Superannuation is only taxed at 15%. So rather than your 32.5% plus 2%, which makes it 34.5%, I now only pay $15 in taxes. Magically, because I put money into my superannuation fund, the government taxes you $15 rather than $34.50. And your take home becomes $50, $70, $80, $85. So the difference here is $19.50. There is a catch. While you take home $65.50 immediately, if you choose not to put this into superannuation, you can get $85, but you cannot touch your superannuation until you are after 60 years of age. If you were born after 1964, if you were born before that, you may access your superannuation earlier. However, I'm assuming most of us were born after 1964. So 60 years of age is the bare minimum that you need to be before you can touch your superannuation fund. Now, according to YouTube analytics, most of my viewers are between 45 to 55 years of age. I'm only in my 30s, so I still have a good 30 years before I can touch this. Some of you who are closer to 60 may choose to put this in your superannuation fund to take advantage of the tax minimization strategies. Also, your superannuation fund tends to make money over time. If you don't feel that you want to put that much risk in the stock market, you can actually designate this in cash in your superannuation fund. So not only are you accessing the immediate tax benefit of $19.50 per $100, you can leave it in cash. Who wants to say no to free money? So, I owed $4,300 to the ATO. But because you all saw me reduce my taxable income, you all saw me stop my superannuation once every single month, I reduced my taxable income down from owing the government money in taxes down to them owing me money back. Because rather than giving them $34.50 per $100, I only gave them $15. So the real question is, do you want to take home $65.50 now, or do you want future you to have $85? That's a decision that you need to make. But I really want to minimize my taxes so that I can maximize my future returns. Think about it as saving over a long-term period. The tax benefits in this country outweigh any other investment you can think of. There is no investment that's going to give you that high of return immediately. As of September 2023, some of the best high-interest savings bank accounts are offering 5.5% interest. There's nothing coming close to a 19.5% return, except for the Australian government and the Australian taxpayer. So this is a process that obviously gives you far, far more money in the future, but an immediate tax relief now. I also see that a lot of Australians are cash stuffing to save for a first home. Currently, the government also has a first home savers scheme where you can actually put upwards of $15,000 per financial year into your superannuation fund to take advantage of this 15% tax scheme. And then you can withdraw it when you go and buy your first home. It's the same thing. You just pay 19.5% less tax. So even if you think, no, but I want my $65.50 now because I want to buy my first home, you might want to consider using this scheme to minimize your taxes and still pull out the money at the end of the day. So I know this was a bit long-winded, but I really wanted to share what I really mean when I say I minimize my taxes every single year. There are, of course, other ways that you can minimize your taxation. Obviously, go consult your accountant when you do this. But the best, fastest, and in my opinion, the most lucrative way to do so is through adding money to your superannuation funds and your retirement savings. Okay, so just a little bit about the nitty-gritties. Most people are employed, so their employers will take care of their super guarantee. In 2023 to 2024, the bare minimum that is required by law to go into your retirement every year is 11%. As you can see, the government has legislated that this number will go up all the way to 2025 to 2026, where you have 12% of your wages, of your salary, going into your superannuation. Now, I've just talked about how I then claim my tax back. I'm self-employed, so I have to do it anyway, all by myself. But if you would like your employer to do it for you, you can salary sacrifice, or aka it's called a concessional contribution. Say you're already getting your 11% from your employer and you want to bump that up by a couple $100 every paycheck or every couple of months. You can ask your employer to directly tax you right out of your pay and put it into your superannuation fund. This is what you would need to ask for at work. But say you prefer to have the money in your own accounts, and then you might decide, okay, then I'm going to add it to my superannuation account. This is called an after-tax contribution or a non-concessional contribution. Now, every year you're allowed to make a maximum of $27,500 per year to this. So that's in addition, your own contributions in addition to whatever your employer is already giving you. To claim the 15% tax benefit. So, if you're putting more than $27,500 per year into your superannuation, you're doing very, very well for yourself. Now, say that you still manage to do that and you want to take advantage of the 15% taxes. We have something called a carry forward for the unused contributions for a maximum of rollover of 5 years. You can look into that if you would like to put even more money. Now, if you decide to put your own money into your own superannuation account, so rather than your employer doing it for you, you need to make sure all of the money lands into your superannuation account before the end of financial year, which in Australia is June 30th. So you can keep that money in your envelopes, in your cash stuffing envelopes, or even in your bank account, but you have to make this deposit before the end of financial year. On top of this, after the end of the financial year, so anytime after July 1st, you need to file something called a notice of intent to claim a tax deduction. Now, this is a form that your superannuation account already has, so you can go to their website and download that form, and you need to submit that to them. So how much extra money you put in. Say you saved an extra $2,000 in your cash envelopes during the year. On top of what your employer already gave you. You're going to have to say, you know what, I added an extra $2,000 this year to my superannuation fund. Give me the tax back. You must file this after the end of the financial year, but very importantly, before you submit your tax return. So, I've got all of this together now. That's why I went to see my accountant. So, with all of this information in mind, let's get started with today's cash stuffing. So first, we go to our taxes. I had already put aside $6,100 for the end of financial year. Now, I did say that I didn't think I owed that much money, and I was correct. So I'm going to pull out that whole amount. $5,000, $6,100, leaving me with $2,000 in my taxes. This $6,100 was because I was financially conservative. I do tend to overestimate with my numbers every single month. I don't count my deductions in this, and I don't count my salary sacrifice in this. So at the end of financial year, I get a bit of a boon. So I've just put this in all of the denominations that I need. Let's count it up. I have $1,000, $2,000, $3,000, $3,500, $4,000, $250, $300, $400, $500, $600, $700, $800, $900, $5,000. $100, $200, $300, $400, $500, $600, $700, $800, $900, $950, $970, $990, $995, $6,000. 20, 40, 60, 80, 100. So it's all here. If you're new here, I do use play money, so Australian prop money, in order to represent all of the money I have, because I use my offset account attached to my mortgage also as another method of tax minimization. I have discussed it before on my channel, so if you're interested in that and you have a mortgage, check out that video. The first category, of course, that I'm going to stuff is my superannuation. And today it's going to get $750. So in total, in my salary sacrifice for this financial year, I have $1,500, $750, $2,000 already in extra salary sacrifice. Of course, last year and the year before, my mortgage wasn't as high. So I was able to put so much money into reducing my taxable income, and obviously to take advantage of that and pay for my retirement. This year, my mortgage being where it is, unfortunately, I'm not in a position to be putting as much, but when I have money to spare, I'm still going to be taking advantage of this tax. $2,000 extra into the super. This sits in my bank account, in my offset account, until very close to the end of financial year. So in June of next year, I will make a deposit into my super fund. Council rates. I'm going to be giving this a boost of $95. I want all my future cash stuffings to be an even $100. So rather than that odd $130 number to deal with every month, it's going to be $100 from here on out. So in total in council, I have $50, $70, $90, $100, and $5. Same thing for my strata levy, it's going to get $120. So it now has $120. Directly onto my savings. I'm going to give this a whopper. It's getting the lion's share. It's getting $3,000. Now, I think I am probably the most financially conservative of all Australian cash stuffers here on YouTube. I try to watch everyone on YouTube. And if I don't watch you and you're an Australian cash stuffer, please hit me up in the comments below. I think that you need to minimize your taxes every single way you can. And I also think that you need to have a massive savings and emergency fund. So in total, I have $1,000, $2,000, $3,000, $4,000 in my savings. Emergency fund remains at $15,000. Now, I did think about adding it to my emergency fund, but realistically, savings and emergency are the same thing for me. Splurge. It's getting a big one today. As a reward for my own financial conservatism and as a big pat on the back, I am giving myself $400. So in total in splurge, I have $100, $200, $300, $400, $510. I have nothing I really want to buy except for maybe one of those electric slow cookers or instant pots, those pressure cookers. But right now, I think they're just too expensive. I might wait for it to go on sale. Maybe a new pair of earrings as well. Home and miscellaneous. I would like to start saving to do some minor home renovations. I have floor-to-ceiling windows in my living room and in my bedroom. So I need to get custom-made fly screens. So today it's going to get $600. In total, I have $500, $600, and $5. I think I'm going to build this up to at least 1,000 and start getting quotes from there. Family is going to get a boost of $150. So 150, 60, $160 in the family fund. Gifts and hosting, I will be hosting something very soon, so it's going to get $100. So in total, I have 100, 150, 170, 180, 185 in gifts and hosting. And that's it for the bills and sinking funds binder. On to my savings challenge binder. New phone is going to get a boost of $300. 100, 200, 300. So now in new phone, I have 100, 200, 300, 400, 20, 40, 60. $460. That puts me almost at a third of what I would need. No rush, happy to go slow and steady on this. Next one is Christmas. Christmas is going to get a boost of $120. But $120 is going in. Taking my total to 100, 200, 20, 40, $240. The next one is Lunar New Year. This one's getting a big boost of $240. So I'm nearly halfway to my goal. Now I did look up when Lunar New Year is. It's on Saturday, the 10th of February. So I do have a lot more time to go. This year it was in January. So luckily it's already got a big dent in it. So in total I have 100, 200, 300, 20, 40, 60. $360 in Lunar New Year. The next one, getting love, is bills and utilities in month ahead. I'm going to help myself massively for the upcoming summer, and I'm going to give myself $200. So this fund is just to help me with a bit of bill shock. And because I want to turn on the air conditioning this coming summer, so I will be stuffing my regular amount into my bills, but then I won't have to deal with any surprises because I'll have added this money to it. So in month ahead, I have 100, 200, 50, 70, 80, $280. The last envelope that I will be stuffing will be my birthday. Now, my birthday is not for a long time away. It's not until next year, but I'm going to try and finish this one. I did not finish this year, but I didn't need that much money. So $25 is going to go in. $25. This savings challenge, as all of these and more, are available on my Etsy store, which I will leave a link for in the description box below. So that's been my cash stuffing for the redistribution of my $6,100 from my taxes. Now, I do expect an actual tax return refund. According to my accountant, I'm getting one. So I will stuff that when I get it. I hope today's discussion about tax minimization through your superannuation provokes some thought. If you would like to leave a comment down below or discuss it further, please feel free to do so. And if you've made it to the end, I thank you for watching. Please leave me an emoji of money or a dollar symbol in celebration of minimizing our taxes and maximizing our returns. I hope to see you next time. Bye.